Hello and welcome to video 4 from TradeForexParttime.com. Today we're going to be discussing the bid-ask system. So to start with, in any market situation, the holders or the sellers of a commodity are trying to sell their goods at the highest possible price. At the same time, though, buyers are trying to acquire at the lowest possible price. And so this situation, this discrepancy between buyers and sellers, it's causing what is known as the bid-ask system. And so the ask part of this system, the ask quote, is the seller's price for the currency pair that he is holding. And so the ask price is going to be the higher value simply because the seller is trying to get as much as he can from what he's holding. And if you look on your screen here, the ask quote is going to be the number in blue, the higher value, which is 1.0612. On the other hand, the bid quote is going to be the buyer's offer for the pair. And so the bid price is going to be the lower value simply because the buyer is trying to spend as little money as possible to acquire, and the bid price on this pair is 1.06092. And so this difference in price is generating what is known as the spread, and the spread is simply the separation between the bid and ask price. So in this example, if you took 1.0612 and you subtracted this value, 1.06092, you would get about 0.0003, and that's going to be the spread. You should know that spread values can vary greatly from one currency pair to another. The Aussie dollar, US dollar being a commonly traded pair, the spread is pretty small. On the other hand, the spread on a minor pair, a less commonly traded pair, can be many times higher. In addition, spread values can change with a strong trend or a substantial news release. So understanding the spread is really important for the success of any trader, simply because the spread is a hurdle which has to be overcome for your position to become profitable. So for example, to explain that, if I'm buying this pair at the ask price, which is this number in blue, as soon as my order is executed, I'll look at my position status and see that I'm already losing money on the transaction. And this might be puzzling, but it's because I cannot sell the pair at the same price that I just bought it for. The lower number is the price which traders are willing to buy what I just purchased, and it's lower than what I just purchased it for. So in all trades, the spread is working against your position. If you placed a buy order on this pair, the order would not be profitable until this lower number, this bid quote, came up above what you entered the market at. In a similar way, if you're shorting a pair, you're entering the market at the bid price, which is the lower price. And so a short position isn't profitable until the ask price, the number, drops below the bid price that you entered on. So the spread always has to be overcome whenever you're trying to become profitable. In addition, Forex brokers are widening the spread so that they can make money on every trade. So looking at this ask price that I'm seeing in this trading platform, which is MT4, this ask price is slightly higher than the actual price, and so the broker is able to make a profit by selling the commodity to me at a higher price than he paid for it. And so once again, it's just another obstacle for your position to overcome and be profitable. The spread that brokerage companies advertise is going to be expressed in a unit called pips, and if you don't know what a pip is, it's simply the smallest unit in which a currency pair is traded. So for example, looking at this pair, once again, the price is expressed out to 4 decimal places. So 1 pip is simply going to be 0.0001, and so the spread on this pair is going to be 0.0003, which is the difference between these two numbers. That's going to be 3 pips. So if a broker is advertising a spread of pips on the pair, as you see here, the bid and ask prices are simply 3 base units apart. Every retail trader has to execute their transactions through a broker, and so You're going to want to look around at the spreads that are being advertised. A word of caution, though, the spreads that brokers are advertising are often typical spreads, and so they shouldn't be seen as a fixed value. The company can widen the spread at times of uncertain market conditions, for example, when news is going to be breaking or there's a really, really strong trend. In addition, there are a lot of dishonest brokers and will widen spreads at times which are seemingly random, but in reality they're widening them because it's simply profitable for them. So you really should look into the track record of the broker that you're going with. And so obviously there are substantial differences between brokers and the spreads that they charge. So really do your research when choosing a broker. Thank you for listening to video 4 from TradeForexParttime.com. Please look forward to our next installment, video 5.